Okay, welcome to Forward Focus. It is March 29th, 2019, and I am coming to you live from the sunny White Mountains in Arizona. And I seem to have a good internet connection. Yay, the crowd goes wild. I know, it's just me here. Oh boy, gotta entertain myself sometimes. My sidekick is off doing the snowboarding thing here today. No broken bones from me from snowboarding. I am staying off the mountains. I am a little paranoid after having massive spinal surgery. I will leave that crazy stuff up to them. My husband does all of like the black diamond stuff. I'm like, nope, just nope. Not for me. Some of you guys are like, yes, we can't have you get hurt. I'll be doing the hiking and, staying a little bit closer to both feet on the ground and out of the snow. That's a big thing too, out of the snow. It's nice, balmy 43 degrees where I am. They're the silly gooses going up into the snow. Well, you need to start bringing up more Forex then. Seriously, for those of you guys that are in the forum, feel free to talk about any security you want to. I know right now most of what you're seeing are futures traders, but trust me, there's Forex traders in there as well. Isn't this Friday? Yep, it's totally Friday. All right, we're gonna switch on over here to the charts. Oh, my screen. League of Traders. We've got a totally wrong screen here, don't we, guys? There we go. That makes more sense, right? More better. I hit the play from current screen and then wasn't paying attention. Whoops. I am on a one screen window right now, so half of my screen is covered up with you guys. The alternate universe where we are 24 hours delayed. I was speaking of which, though, League of Traders, you guys, your reviews, you can go and watch both of the videos from Tuesday and Thursday. They're in the member section now. And the Mentor Monday is in the member section as well. And that's when you do not want to miss this week's Mentor Monday, last week's Mentor Monday. They talk about wave counting, and it goes into a lot of the little details and variations and types of waves that we have and how those types of waves affect upcoming probabilities. So if you have not watched them yet and you are in League of Traders, make sure you go back and you watch them here over the weekend. Really, really important. All right, let's switch on over here to the charts. I'm gonna have to move some of this stuff so I can actually see you guys a little bit more clearly. And color point. Well, you could have snuck in if you hadn't announced that you were late and you were sneaking in. That's kind of the dead giveaway. All right, let's pull up our charts here. I got to close some of this other stuff we got going on in the background though. I told my husband, I'm like, I just need to pack up some extra monitors if we're going to be out of town for a couple of days. All right, let's start with the S&P 500. And we are going to first look at the indices, bigger picture on the indices, and then we will go and take a look at some of the other markets as well. So S&P 500, we've been in a zone of congestion here for a couple of days now. We've had a really strong drop off of the high. I'll kind of widen this up and just make it a little bit easier for you guys to see. So this is our S&P 500 futures ES contract. And what we're looking at is an overall constant shift in momentum that we've been having unfold over the last, basically over the entire course of the year. Started out really rapidly, got this midway shift end of January throughout a lot of February, and then here into March, we're shifting even further. So we have one main drop off of the highs right now. This is a little bit more than what we would see for a halfway move for the previous drop. So if we were looking at something that could form an easy parallelogram, usually what we would be looking at is that this drop here would be about half of this drop here, and then you could get a secondary drop that would give you these nice parallel levels at highs. But you can see we went past that 50% point. So right now, this is still looking like we have congestion here in the middle of a bigger channel where this is still one wave down, and there's still potential for a second wave down. What would tend to happen though, if that holds as it is looking, is that it would start to widen up. We would get a bit more of that megaphone type of action going on, kind of like what we saw yesterday morning on the NQ in particular. I can show you guys what that looks like. I believe it was yesterday morning. Here we go. So when you get into things like that, where it goes back more than that 50% point, you get these megaphone type of moves beginning to develop. Those can get more tricky. A lot of times you might get a third high, and it can react off of the third high. So you don't know, or it can congest along the third high and eventually end up breaking to the downside. That's kind of what we saw happening here. But the megaphones become trickier spots. We're going to be talking about more about the megaphones in Mentor Monday here, 2 weeks from, well, a week from Monday, I guess I should say. That will be our topic. Here's another megaphone, even just this morning. So a lot of those going on, and that's what would happen here if this goes and gets a secondary drop. It's basically going to give you a widening range. So if you're looking for something like the potential for a momentum reversal off of highs, what would usually happen is that you would get 3 evenly spaced highs, parallel channel, and that can allow for things to turn around and break lower. This is ideally a pattern that you will see after 2 really clear-cut moves on the upside, sometimes 3 clear-cut moves on the upside. And then that shows you full trend exhaustion, especially if this is at major resistance in the past. We don't really quite have that yet. We're kind of still in this middle territory on the larger time frames. A little bit of room still to wiggle up at highs. So the other possibility when you have this kind of extra wiggle room up here, here's our megaphone on our weekly charts. is that this can still try to keep pushing higher. So it can still do this with a tilted move, a tilted channel, and still look to push higher. We saw that tilted action back in here, for example, and it can still keep things going. That makes this a really tricky zone to trade in. And what we're seeing happening at this zone is that we're focusing more on what's happening on the intraday charts and not quite as much as on daily charts for swing trade type of positions, position trade type of trades where you're looking to hold a couple of days to a couple of weeks. More the focus is looking on just the intraday plays or maybe a couple days, but not really going past that. And that's going to be my main focus here as we continue, because on the larger time frames, I don't really have a strong bias yet for the overall market. We still are in a zone where this could still chop higher here. It could go into a secondary correction like this, but usually that will start off slower. So you'll get a little bit more overlap. You can see this is how, we started to chop around up here. And then it'll try to start to pick up more momentum. So usually you'll start to see that shift on a daily time frame and then like the 240-minute time frames, and that will help position you for something that can turn into a bigger swing trade or position trade. Right now we don't quite have that happening. The closest we got for potential is that move here on the daily charts for a possible breakdown here. So this could move for 1 or 2 days fairly easily. We'll want to focus on the intraday time frame, because when we are coming off of this high here on the intraday time frame, what you see is that this move was really sharp. It's much, much stronger than average. So even though this is continuing to hold with basically what we were talking about last week and going into the beginning of this week, the pattern where we were looking for this zone of congestion and then the possibility of another breakdown. So all week, we've still held with that potential that we were seeing right at the very beginning of the week going into this week. And it's still holding. We're actually at a point where if this pattern continues to hold, we should see this pull lower into this afternoon. And because of this increased momentum, though, it can increase the odds that that follow through can go more like this. So you can get your two ways down, but the overall channel can shift like that. What that would mean is that if that happened, it could hold this into the parallel levels. So if it goes as fast as the initial drop and puts in a measured move, that's probably going to push it past that. But if it holds within it, then with a slower move, we're more likely to hold in that bigger parallel level and get another reaction again off of the support. We actually saw, I was looking last night with Harvey, we actually saw the Bitcoin on the weekly charts. We were looking at this because it had a very similar action compared to what we were seeing. And I want to go back and show you that. So weekly here, actually I need to show you the daily on this, not the weekly. I'm going to go all the way back to last January. So the reversal that we were looking for at the beginning of last January is the same type of situation that we've got going on here on the intraday charts. Let me see if I can make this so you can see both of them at once, as close as possible anyways. So you have the massive drop to start with, the two-wave correction. That's what we've got going on right now. And then here's the breakdown. And so this is the two-wave breakdown that I'm talking about, where you can get some strong momentum to start with, but it has a harder time just fully holding that momentum. So more often than not, it will start to shift, and you're more likely to see something like that two-wave move on the downside. So that's kind of what we're looking at here. It's what we were looking at going into the beginning of the week, and so far the entire week has continued to hold. With this, it has meant a lot more back and forth action intraday. It's definitely made for more of a scalpish week for a lot of traders. And this brings us to time development. So time development, when we get to a point on our chart where if we are looking at this first initial correction and the return back to the lows, so basically your up and downside V, if you take that and double that, that's where that next low should hit. Basically coming back to the lower end of that channel, that's where you want to see that hit. I posted a chart of this in the forum talking about trades yesterday. So it should come back down. I didn't fully connect those lines very well, but it should come back down to that lower level right around this time. So what that means is that about 2/3 of the way into this box is good timing for reversal trades. I'll show you that on the forum actually. So you guys can see this. That's today's. Here is the preview of what I was looking at. Here's the comparison for the Bitcoin. And then here we were looking at comparison at highs. Let me go, I gotta find the right chart for you. Here we go. So same action here yesterday, where you got my pen, the first initial bounce and correction, second bounce, about 2/3 of the way there, comes back, tests it right at about that same difference. So that becomes our next support level. In avalanches, this can shift the momentum like that. But basically that tells us, hey, you know what, the timing is a really good level here as far as this whole overlap trading pattern. And that's what we've got going on right now. On a larger scale, in the overall market. So this is a 240-minute chart here that we're looking at. So that makes me cautious on the long side going into the afternoon. Most of my focus is going to be more on the downside. Let's show you the other indices here. So here's the NASDAQ. We're just coming off of a two-way move up in here. This one can be removed now. And you can see on the daily chart on the NASDAQ, this could still easily creep around anywhere in this high. So when price action looks like this, there's not a huge major bias on the larger chart itself. The main thing we have to watch is that this is going to be a resistance zone because this is a V bottom where the upside momentum overall is about the same as the downside momentum. Two different ways of how that momentum formed, a lot more overlap on the way back up, whereas it was more a two-wave move on the way back, on the way down. But overall momentum pretty close to the same. So that means that the previous high here is going to be a really strong resistance zone. But it can test that resistance zone any number of ways. So basically about a 76.4% retracement of this drop is where it comes into the lower end of that resistance zone. The upper end of the resistance zone can be extended usually by about 23.6 or so percent above this drop. So it can be a really big level of resistance that you're looking at. Sometimes you're going to get clear reactions right off of it here, right off of a 76.4% retracement. I'll actually put that level in there so you guys can see it instead of just trusting my word for it. All right. There's the 76.4% right there. That's basically the lower end of upside resistance when you have a V bottom. It's the lower end of what you can consider to be a full retracement. Even though it doesn't like specifically hit the prior high, I still consider this to be a full retracement zone. It's also the zone where when you're looking at this breakdown, if you can draw a straight line there and take that point straight across, which I can't draw straight with my mouse right here, that's a main zone of resistance as well. So you're taking this breakdown zone over here, drawing a straight line across, and that's basically where we've got the highs here. Here things can widen up. You can get whippiness. You can get, the range going into things like a 2T. It can shift, or it can still, like I said, creep and do that kind of almost extra wave and do that measured move. A lot like what the S&P 500 did last year. Let's show you on the weekly. See here? So it made it right up about 76.4%-ish, but then it still kind of kept creeping. So here's the V off of the low, but it still managed to kind of keep creeping. It was probably around that negative 23.6% extension on there. And that's a pretty typical upper level. So it comes down to watching the momentum that's going on the smaller scale at that point and taking fewer cues based upon this bigger time frame. Let's see here. I'm going to show you the Russell next. So Russell is kind of an underdog here. And you can see we've got pretty much a two-wave correction in play already on the daily charts on the Russell. And this is also in this V formation. So the bigger V, of course, is here, which meant that the overall zone of stronger resistance can still happen up here. But because of these sharper drops in the middle at this point, it's going to take a little harder time to try to do that. This would typically need to shift momentum. Something like inverse head and shoulders that could try to change that and turn it around. But in all honesty, there's not a really good chance of that happening based upon what I'm seeing so far. I want to see some additional shift, maybe like a 2B here, but with the way this is acted with the second drop faster than the first, it actually leaves it more open to trying to go for a third drop. That would be a little bit closer to what you have for the first. So that would work along the lines of what we're seeing on the S&P 500, where it's basically been congesting, because that could try to bring in that third drop on the Russell here. Let's see, intraday timeframes, we've got a two-wave bounce. So it's got some good resistance. So this could go and do it with like a head and shoulders. That would be one way for that to form. Time development wise, basically what you would want to see is testing the low right around here. So you've got the same time development factor that we saw on the other markets. So something that could shift it here, it could be, an inverse head and shoulders, something like that, that can bring it back down to this level. It's a little bit early because ideally what you would want to see is it at about that 2/3 mark. So a high over here ideally would be right around in here. So it's a little bit early for that as far as ideal time development. So I know we're playing things, pretty close to the belt here intraday, but we are getting really nice moves on those intraday charts. Usually what you have in a market here is you get the two-wave movement back and forth when you're in these channels. You can see a good example here, two-wave down, and then we've got our main two-wave back up. That is pretty normal. Looks like I'm missing a little bit of data here on this chart, but that is a pretty normal type of circumstances in the back and forth movement here. And then let's go look at some of these other markets. I lost my questions box on you guys. Where are y'all at? Are Fibonacci fans good for trading bugles? Trading bugles. Like our megaphones? Is that what you mean? Yep, they work pretty well. They will usually hold for short-term reactions. So, for example, let me grab if you're looking for the move on the upside here, you'll notice that you get a reaction off of the 61.8, you get a reaction off of the 76.4, but it's harder to fully turn them around at those levels. So you'll look for the 61.8, 76.4 when momentum overall has a channel that is shifted like this. That's going to be a high probability for a stronger continuation type of move. Otherwise, it's just more like a pause zone. I'm going to go back here and look at a couple of other futures. I want to show you guys first the gold that we were looking at last week, because it is coming up at first support on that breakdown setup. I got stuck here. Where am I at? Let go. There we go. All right. So what we were seeing as we were going into last week was this two-wave move here. So basically the avalanche formation formed here. I'm going to show you the intraday chart so you can see this even better. And I put that first support zone in the room yesterday in our forum. Because here's our first main move up. Here's the second main move up. Here's the smaller avalanche trigger and the bigger one. Here's the 2T trigger to start it. the 1, 2, 3. So this became the first main target. And usually at this point, things start to go widening up again. You get more of the back and forth type of zone. And that's what we're seeing here with today's action. A little bit of upside. It's also the zone of, again, not a straight line, but the zone of that previous low where it broke higher. So that breakout level where it goes and breaks the upside, that becomes your support level. So that is right here. So now we're kind of going to be more of some back and forth action here. Overall, on the larger time frames of gold, if we go up to like weekly, even a monthly, we've got action that in the longer term, this can try to break higher. It's not an ideal formation, but it's a lot like what we've seen happening on bonds on the smaller intraday charts on like the 240-minute charts. With the upside, we get this two-wave correction, we get the V reversal all the way up to the highs, congestion along that high, and then tries for a breakout. So the longer term outlook on gold isn't looking too bad, but there's still a lot of congestion zone in here. This is further than you typically get for a normal Phoenix. So it does have some increased risk with it currently, but it is really close to that bonds chart. And I can go ahead and show that to you as well. Oops, that's wheat. It looks like I don't have a bonds chart open. Well, I guess we'll open one. Give this a minute to load here for us. So you're looking at this here, but on a monthly scale for gold. So here it is on the Ninja Trader. And then here is kind of the same type of zone right here on gold on the monthly charts. So basically what I'm comparing is this action to this action. So looking for a level at which this can break higher. Of course, one difference we got is, bigger two-wave extension on bonds than we saw coming off of the lows in gold, but that hasn't really made too much of a difference when looking at this pattern as a whole over time. What it can do is it makes it so that your time relationship, so your congestion compared to your upside, has a little bit better of a time relationship than this upside to this congestion. So ideally, you don't want your congestion zone to go more than twice your upside zone, or it makes it harder to get the strong breakout. And so in this case, what you'll see is that that is clearly not happening. So about one, about two, probably around more than 3 times that upside move so far. So that's the main con that we have on gold on that larger scale time frame. And then of course the smaller scale time frame, we're dealing with the selling here currently, which has room to wiggle and still pull down a little bit more here. Palladium is one I'm going to show you guys because Harvey brought this to our attention this week, and I never trade it, but it has such an awesome pattern here this last week. I want you guys just to take note of it. So good exhaustion move here. Actually, this is the same type of move that we were just seeing on gold and on bonds, where you had your upside move. Has the slower start, stronger pullback, V's. Here's the congestion. So this is the current zone that gold is at right now. And then here's the breakout. So once again, you're seeing that pattern repetition. But what the fun part is here on palladium is when we drop down to the smaller time frames. So we drop down here to, this is the weekly. And we have really nice measured move here, smaller, 1, 2, 3, and then a shift in momentum at highs. That shift in the momentum is the main point. So this is when you guys are going to want to look at as just like a one to study, because this is such a picture perfect 2T here. Nice, steady, two-wave move. Here's the short trigger. Drops, goes into an avalanche, goes into a 1, 2, 3, and then this is where things are widening up. So this is what I mentioned here this week when we were coming into that support. And you can see right there, it almost held that measured move perfectly. And it's in the widening up zone right now. So actually in the widening up zone, two waves up, that often goes for a repeat where it can go and retest the lows. But this play-by-play here, typical pattern you guys are going to see over and over and over again. I posted some images of this on Instagram. I posted it in the forum. So you just want to take note of that repetition of patterns from the 2T to the avalanche to the 1, 2, 3 to the widening up, because you're going to see that whole thing over and 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 over again. Yeah, I've been doing this for more than 20 years, so that's a lot of overs. Oil, we are right smack at measured moves on the 4-hour chart coming out of its breakout. Measured move. So we are doing the reactionary move to that here. Go take a look at this on a bigger time frame for you guys. Oil 1-week chart is at a perfect zone that it could still keep creeping up. We are actually going to be talking about this in Mentor Monday, because what it is that you've got one wave up and then you've got the shift in congestion. So it can go and do a second move up here, or it can go and get choppy and move it head lower. Right now, oil is favoring the former versus the latter. It's basically treating it like a tilted phoenix, and it's right at the do or die spot on the weekly time frame. I'll show it to you on the daily chart here too. So daily, what has increased the odds on the break to the upside for a bigger move is just the fact that when it is corrected, it has a little bit of a more slower, more gradual correction versus the deeper V's. So that can increase a shot of it breaking the upper channel and going for basically a measured move compared to here on the breakout move. So I am leaning more towards that on this one, but this is a tricky level. And we've newly dubbed this a wipeout zone, because a lot of traders will look to short at their test of highs, keep kind of moving the stop up, giving it a little bit more room, and kind of blowing out their accounts. And you can easily get trapped the wrong way on something that is tilted like this. When it has a more solid correction like this, where it looks like a nice inverse head and shoulders, so much easier to take that with greater confidence for breakout to the upside than it is when something is tilted after only one move up. When it's tilted and you've already had two waves up like this, and then you run into that tilted action, there's actually a higher chance that's going to lead to a full reversal. Midway zone, it gets a lot more wishy-washy. So we're right in the do or die spot, and these are your two-wave corrections in here. Lost my chat box again, you guys. Where did you all go? This room is tricky when I'm trying to do it on a laptop. You're hiding from me, playing hide and seek. I really don't see the chat box. If I close everything, are you there? No, you're not. There you are. I know you're still here. It's just I'm on a laptop, so everything gets hidden behind everything else. Okay, so let's look at some of the Forex pairs here quick. I'm holding him to it. I was totally serious when I said I was going to pack up monitors too. If he has the entire back end full of snowboarding gear, we should surely be able to fit some monitors in here for me for trading, right? I need roadies. I bet Chris would volunteer as a roadie. Okay, so euro dollar. Oh, this is a mess. Looks like we've got some further downside here intraday. I don't think I'll do too much with this. So it's coming up on the lower end of basically these smaller extension moves, impulse waves. And it's doing it with like some shifting momentum, larger time frames. We've talked about this a lot, like pretty much every week for months and months and months. When we go and look at the monthly chart on this, we are just not in a great spot. Here's the weekly. It actually is looking more and more bearish as we go along. Again, this is the wipeout type of zone because we only have one main move down right here. Then we have the shift in momentum right here. That leaves the gate open that this can go for a second wave down here. And yeah, I know I hit the wrong button. And so basically, it'll go like that. Zoom, zoom, zoom. So that's what I'm looking at right now. In here, it was a little shifty. It wasn't sure because it had the widening wedge. It wasn't sure which way it was going to try to really favor breaking. Had a little bit of that shift, the slower shift here. That's been the main key we've been watching, but it's been getting off to a really slow attempted start to break down. So I'm going to continue here with the bias I've had over the last week or so, last couple weeks actually, where I'm focusing more on the downside right now, but again, off to a slower start. So not really any new setups here at the moment. I'd like to see like another little bounce, get a better entry on this, but keep watching this more focused on the downside for swing and position trade type of trades. Aussie dollar also has its own issues with larger time frames. Can't see it as much on the weekly chart, but basically it hit our measured move that we were watching for months here at the end of last year and has been doing the widening up at this point. But if we go up and look at the monthly chart, there's not a huge main bias on this. A lot of times we'll see this break down like this because it already had the two main moves to the downside. So many times we will see this only go here and then bounce again. And sometimes we'll see it do two waves down and bounce again. So it's at another do or die point where is this going to be a kneecap and go for wave two? Or is it just going to hold here and bounce? S&P 500 did this on the E-minis within the last day or so. Let's see if I can remember the time frame to show you exactly what that looks like. Which one was it that it did that? Kind of here is an example. This isn't the one I was thinking of, but you can see how it does the little pop. This one did the two waves and then back up. That wasn't the one I was thinking of though. Which time frame was it? Sometimes I'll picture a pattern in my mind that I know I saw, and I can recall exactly where and when, and then other times I can see the entire pattern in my head, but not recall exactly when it was it took place. Disappears. Oh, here it is. I knew this happened. Here we go. So here's the one where it's just the one main wave down and then kind of bounce. So that's the other kind of option we hear that we are looking at with the Aussie dollar, that it tries to do that version. And it's right here. So let me kind of put these side by side here so you can see them. Like that. Notice how similar those look. Pretty similar downside moves, congestion downside. Base time development is about the same. It was a little bit cleaner on the ES, but really same type of activity. Dollar yen monthly has a wedge. So wedges can basically break either direction. Daily chart, we finally got that breakdown after our two-wave correction we were watching a few weeks ago. So it's basically the same type of pattern that is on gold. And then here was the breakdown, two-wave breakdown. So this was where we got to the widening up zone. So that's where we're just going to see some more back and forth type of action on here. This could go into a little bit of a longer base and try to break down again like that. Probably slower overall breakdown again. That's what I'm looking at as the most likely course of action at this point. Something where it kind of shifts up and then it shifts down, but not as fast down as it did over here. Dollar Swiss, just holding previous highs. This is another one. The weekly and monthly are just not really giving us a major care because they could break either way. So it's going to come down to some of the smaller time frame momentum shifts on this one. And I don't really see anything here yet. So just stick to more of the pivots. What you'll notice here is that this downside move is pretty similar to a lot of the other impulse moves. So we are at some exhaustion here on some intraday charts, but this looks like it still can kind of creep to a little bit of a lower low. You'll notice the same type of thing happened over here. So that's the potential that you can have happening here as well. With the faster drops like this, just like what we were talking about on the dollar yen, that's where you'll see action that's more like this a lot of times when it tries to continue. Euro pound is at some measured move support on the monthly charts. Here's another way that widening up can happen when you get the 1, 2, 3 to the downside. So it widens up by basically shifting the momentum, even though it tries to recover. There's a lot of overlap from one bar to the next. These are in corrective mode coming off of this high, but there's not a strong pattern in here yet. If you missed the pivot, this is actually an either or pattern here, you guys. I want to show you this because it can look a little tricky. So what you've got is you've got your two waves up, and then you've got a two-wave correction. So this is your first chunk, and this is your second chunk. So this can go and do another 1, 2, 3 on the upside like this. But any sort of shift here can sometimes turn these around. So that becomes a trickier zone in here because it is one that is tilted. So it can even pull back down here a little bit better. Time development wise, your do or die points become taking that first two-wave move up and then look at almost doubling that. So to try to go on the upside, you would basically want it to break out of that upper channel right here. So it would mean you would need some sort of pivot off of support right about where it is now. Again, about that 2/3 of this box here. So 1/3 high, 2 highs, you would want it to try to break here to get the move where it ends up basically being a two-wave move on the upside. So it kind of has that time development aspect as far as how much longer it has to do this. Yep, exactly. That's like that money spot zone. What will be the subject for Mentor Monday this week? It's going to be the wipeout type of plays. So we're going to be looking at things that are actually like this here, where you got one main swing up and it's kind of in a midway zone from a previous move. And it's like, what the heck way is this going to go and why? And what are the odds either way? And how can you manage it either way so that if you pick wrong, you don't end up with the wipeouts? So markets like this in here, this is where I see people giving back like weeks worth of gains. So we're going to be looking at that particular type of zone. All right, guys, I've got room for just a couple of questions on some stocks. We've got ILMN. Daily is not a lot. Monthly is a lot like Bitcoin type of action. So these are type of moves that when they try to correct further, you'll often get the bounce. You can get the two-wave movement in here, and then it can break and have like a more gradual kind of start. That's typical for continued correction on this type of move. This is a much larger time frame. Let's see, weekly. So your time development you want to watch for on the weekly on this is you're basically taking this drop. You're about at a 1-to-1. Here's about your 2-to-1. So you can get some of the breakdowns for continuations on these, even with the 1-to-1, but it's not an ideal type of scenario right now. Look at the daily again. It's kind of a thinner, choppier move. So we've got a couple of ways this could have played out. It could go with like the inverse head and shoulders, which will give you one more wave up before you get that next correction. Or, and it's kind of going too late for this, it would go like that and do another wave down. But the time development is off now for that. So it would treat this like wave one and treat this like wave two and treat this as the two-wave correction zone in here in the middle. But it's gotten a little bit too late for that. So the time development just isn't there to give you a good setup on that one. These are ones that basically I stay out of at these points. Wait for something a little bit better to try to develop. Because with this triangle in here, it can go and do a smaller move on the downside. That could create a little bit of a better Phoenix pattern that could allow for that second move up. That would be the head and shoulders pattern. But it would need a good couple of days to develop into that. So your head actually has two lows. So you'd be waiting for this next shoulder. So this would be kind of the equivalent right here and here. And then you're looking for here and here. So a little bit more on that. That can give you the inverse head and shoulders that could lead to one more pull up. And I would only look for a measured move as the main target just at this point. Boeing. These type of gaps in Boeing generally try to fill. What I've been hesitant on is possibility of more unexpected news. So usually these try to fill starting the day of the gap or the day after the gap. And as you can see, this is off to a harder start to do that. It actually did, kind of the day of the gap begin to close up, but came back down the next day. With again news, usually what you will see is you'll get a gap down, but the gap will be like down to here. And then it will start to close up into this. And sometimes it even goes to a higher high, and then it will start to turn around again. But we don't really have anything on here. Smaller time frames yet. I'm going to switch look at the 240. This is so much tricky on one screen. Yeah, so like a Phoenix in here would be normal. What I was watching when this started was I was wondering if we would see more like this and then try to get another breakdown like that. And it's kind of doing a little bit more rounded off. So that might try to pull up easier, pull up into it. I think news this morning, they were saying that they're trying to pull to get everything to get the software updated. I guess apparently the pilots could not manually override the problem that was happening with the planes. I think the last one they tried to do it like 20 times or something from what they recovered. So it looks like they're trying to install software that would allow the pilots to manually override when something like what happened tries to happen again. That's still not terribly comforting, but we'll see. We'll see if the charts show that people are really going to be more comfortable with this again. And of course, you've got dealings with lawsuits and regulatory issues and everything. So Boeing's going to be something that is going to be susceptible to news type of action, kind of a lot like Tesla a year to 2 years ago, as we had a lot of stuff coming out with Tesla. Here is a common way that similar gaps can do the continuation. So this one kind of just based out and did the continuation there. So a lot of times you'll get an actual pull up, and it looks like there is that room for this to try to do that. But I personally would prefer to stick to intraday stuff on Boeing for the most part, unless you can get yourself a hedge or something put on. AABA. Really good resistance zone here at highs. This is a widening out zone. So you can see that retracement back into the high zone, how it's about 76.4% of that drop. That's that lower end of the resistance level. So it had the three waves into it. So this is where you're seeing the trend trying to widen. Now this can still push higher, and it could even conceivably go to a point where it tries for a measured move. I mean, that's like your upper limits of what you would expect on it, but it is a possibility. And that's also where your upper wedge level would be. So that can certainly happen here over the next year with AABA. You would want to see this do more of just holding with a kneecap and had a pretty fast move. Again, a lot like the S&P. on the weekly. That's what she would be looking for is, no, there we go. Looking for this type of action to try to repeat here. So it has the possibility of that, certainly. It's just meant a longer term, and you want to watch the momentum on the smaller time frames. So if it goes past more than a kneecap, your odds become more difficult. Baidu. All right, this will be our last one here today. And Baidu has that extra flush zone potential on the weekly chart to the downside. Just right away you can see that here. So I would look for room for that to do one little drop here. It's kind of at, if it's going to try to do like an inverse head and shoulders, it would basically have to go. Oops, I'm drawing it wrong. Kind of have to go in here. So this is something I would favor more for one more wave down, just based upon what the larger time frames are doing. Here, just that extra little flush can be like a to be such situation. Again, it's like the S&P 500 was yesterday, where it was just that extra little blurb that I just showed you a few minutes ago. JNUG looks like it will pull down one more time. Mostly it's in this congestion though, so you want to watch for that potential that that pull down can turn into a phoenix. CMG, I know I said one more chart, I'll try to get more here. CMG is at exhaustion. So on the weekly charts, this is where things should widen up here at the highs, get more back and forth action. What we are looking at on CMG is that this is wave one, this is two-wave correction, and this is wave two. So you're looking at measured move here to here, and we're right at that target level. Yep, we talked about the S&Ps first at the very start of the day, so I will try to get our video up here really quickly so that you guys can go back and review everything. And I will be hanging out here in the White Mountains for the rest of the weekend. But I will be back in town for Metro Monday at noon Eastern on Monday for all of you League of Trader folks. And I will be in the League of Traders forum off and on here throughout the day too. My guys are out at the slopes here today. UFOs. Okay, is that a thing here? I don't know if that's a thing here. Are we close to Roswell or something? I don't know. Roswell don't think is anywhere near here, but I'm just wondering about if there is like a current UFO legend. UFOs, White Mountain. Let's see. I'm going to Google this. I don't see why extraterrestrial alien abduction. What? Okay, that's hilarious. All right, gang. You guys have a wonderful weekend. I'm going to get this posted as soon as possible, and I will see you all back here next week.